Good morning and welcome to today's Trading the European Open live here at the Live Trade Room. So you're very welcome to join us. And today now is Monday the 1st of October, so we're entering the final quarter of the trading year. Been a very, very interesting year all in all. We've had a number of different moves in different markets, and what we've actually seen towards the latter part of last week is a little bit more direction for us than what we've seen for a number of weeks prior to that. So hopefully that is now the beginning of a nice period of tradable opportunities in these markets. So just before we begin then, what we look to do in this trading session and what you'll experience over the next little while is professional traders looking for high probability trading opportunities. Now we have a means in which we can execute trades with consistency and discipline, and I suppose it's a casing point towards the latter part of last week should I say, in terms of how important it is to remain consistent and disciplined in your approach. Then we'll look to manage each of those trades. If we decide to get into some trading opportunities, we'll manage them by looking to mitigate risk as quickly as we can. So we want to cut our losers short. We don't want to take big losing trades. That's not really the style that we look to adopt. And then when we get into winning trades, we look to let those winners run and see if we can really see some significant profits. So without further ado then, if I could just start with our risk warning. Please, of course, familiarize yourself with the risk warning currently up on screen. And we'll get straight into the trading session. So before we begin, it's always important to make sure we as traders have an understanding of the news flow. So for this, we'll get up Forex Factory. And it's just useful to note that it's actually a bank holiday in China for the majority of this week. So we'll have a market that is not so active as far as the Chinese are concerned. And as we look through the trading week, you can see that we don't really have a huge number of major events, and what we're looking for is, well, largely the red factories there, the high impact news events. So what we can see is we've got a manufacturing PMI number out at 9:30, and what we're effectively looking for is a strong deviation from the 52.6. Now, you can see obviously manufacturing is an important indicator for an economy, and as you can see, it's been on a little bit of a decline, and this figure down here is probably the lowest we've had for a while. That's not ultimately surprising due to the, I suppose, lack of clarity regarding the Brexit negotiations. So of course it is going to play itself out probably within the manufacturing industry as much as probably any other. So we are seeing sort of, I suppose, the Brexit negotiations weighing heavy on the manufacturing side. So no surprise really to perhaps be getting a figure in around the 52.6. That is the expected figure. And a strong deviation below that, we might see some further pound weakness, and I suppose a bit of strength coming in above that number would mean would potentially mean a little bit of pound strength. So we can come back to this news event at 9:30, and the only other bit of news for the day is a manufacturing number, ISM, out of the US dollar, and again we're looking for that strong deviation between those numbers. And you can see it's a little bit more erratic with this particular number, and we're talking about let me get up the actual manufacturing number. So this number has been on the rise. It's well documented. It's often a part of Donald Trump's rhetoric about his performance, and we are seeing the figures stack up, to be fair, and we're looking for a number, 60.1%. So we'd expect a good strong performance. You can see the performance for the previous month, which exceeded expectations. It was expected to be down here around the 57 level and actually came in at 61.3. So a good strong performance last time out. Let's see if we get the same this time round. Okay, so those are largely the two major news events for the day, and that is of course outside of your macro geopolitical events. And to just touch upon them very, very briefly, we're talking about the global trade talks between the US and China, and the US and Europe, and the US and Canada. We've had an agreement in place now with the US and Mexico. So those issues can weigh heavy on the markets, and on the European side we've got I suppose there's political issues within the EU structure, but we've also got the Brexit negotiations, which of course are going to weigh heavy on both sides. So that's just a little overview of the news. So let me now bring up the charts, and Monday mornings are always quite useful to just take stock of what has happened. We will look at the weekly time frames. So we can see that we've had a really strong bearish engulfing candlestick last week, impacting the US dollar, and last Wednesday we had the FOMC actually take quite a hawkish approach to increasing interest rates. They're trying to suppress inflation, and they can use interest rates to do that. So what we're looking for is a high probability trade, and we're very close to that 1570 level, which is the weekly low. So we're definitely going to have a look at opportunities to sell. So when we go about identifying opportunities, it's number one there in becoming a master of price action. It's that ability to identify. There's obviously many markets to look at. Which markets should we look at and concentrate more so than on other markets? And multi-time frame analysis and looking at daily time frames are really important in that process. So we're seeing a bit of selling coming into the market today. So we'll continue to look to see if we can run with that. The previous market is coming from top left to bottom right, so we're in a downtrend, and we're just expecting that downtrend to continue. So hopefully that will finally give us some really good opportunities. As you can see, we've had this sort of slow grinding upward moving market since the end of August, very much within kind of a fairly short range, and now the last 4 trading days have been quite explosive to the downside. So now we seem to have a little bit of direction in this market, and we'd expect continuation below the 1570 level, and that's the euro dollar. So we can apply similar logic to some of these dollar major pairs, perhaps not all of them. We look at the pound dollar. We do like this market below the 130 level. We're just procrastinating above that. So maybe over the course of today, or maybe even tomorrow, we might get that clear opportunity below the 130 level. But for now, there's definitely better opportunities to focus on. One of them being the dollar yen. So we can certainly add this. This is a weekly time frame, so you can see. Let me just convert this to the daily chart, and the dollar yen is breaking now above the weekly high, which is the 113.69. So we've during the Asian session we've now broken above that level, and we'd expect continuation to the upside from here. So so again, this is a really good opportunity to the upside. Now the yen had been selling off for quite a little while, I suppose, off the back of the US equities, showing signs of strength. So we've seen the yen sell off quite significantly, and then on Wednesday night we had the really strong explosive move, clearing this level, because it was quite important that we did. And we did so with conviction, Wednesday night, pretty late Wednesday night, and we had some continuation on Friday, and now today we've got continuation once more. So we're above the weekly high. It can add a little bit more confirmation to our trading when we look at weekly highs and lows. So we'll definitely have a look at the dollar yen, the dollar Swiss. As you can see, we're kind of bouncing off these lows. We're extending higher as things currently stand. Similar situation really to the pound, where we do like this market higher. Sorry, when I said the pound, I meant to say the euro dollar. Similar situation to the euro dollar. So really, it's only late on Wednesday night and, well, technically all day on Thursday was the explosive move in this market. Let me see. So really we'd expect continuation above this 98.21 level. The only issue we have is we're running into resistance, previous levels of resistance. So that's the only concern that we have with this market. But we'd expect it to roll over to the downside if this level is to prevail. So we'd rather stick with the euro dollar over and above the dollar Swiss. Interesting market here in the dollar CAD. You can see the structural failure to the downside. So this is important. This is important from a price action perspective. I'll just get up the pen. So we've had this market attempt to push higher, make a high, bounce back, and we've had a couple of these. This is a bit odd because we've got a clear rejection for prices moving lower, and then we make a new high. So as you can see, we make a new high, and now we've made a new low. So not quite the price action you'd be hoping for, but we have now closed and gapped much lower in this market. So you can see we've closed, really it's a Maribozu close effectively on Friday. Really strong rejection of these highs, and that was against a really quite a strong dollar. So we had really powerful strength coming into the CAD on Friday, and Monday's market we've gapped below the 28.84, which is the level that we were talking about a lot last week, in the earlier part of last week, and we've now closed below this level. So what is our plan for this market? We can see that there's obviously resistance in and around these lower levels, but we have had a nice constructive structural break. The only problem we have with it is today's price action, the fact that we've gapped lower, we've extended. Let's go and see it on the 5-minute chart so you can see the gap. So this is what has happened in the dollar CAD. So we closed at this level, we've opened at this level, so there's your gap, and we've tried to fill it, but it's kind of failed really, and then we're just not really doing an awful lot. But you could argue that there is a bit of a downward bias pushing these prices lower as things currently stand. So we do like this market lower. We just wouldn't be surprised if we got a little bit of disagreeable price action to work with, and that's kind of what we're looking at here. So we can take note of these lows. I'll just change this to our intraday color. So this is more of an intraday level. So really below this level, 28.13 would mean for us that we can clear out the potential for this market to create structural failures back to the upside. We have created a higher low just in here, and this is a bit of a structural high. So let's see if prices move above or below that level. So we do like this market to the downside. We're going to reserve a little bit of, we're going to be a little bit patient with that market. We think that's quite important. The Aussie dollar, similar situation to the euro. This was again another good market we were in to the downside. Friday we saw a little bit of positive price action come in for the Aussie dollar, but then that subsequently sold off as the day unfolded. And now we've actually, this candlestick, what it represents is a gap to the upside and then a rollover to the downside. So we've now firmly filled this gap, as you can see. So there is your lower price on the close. We've gapped to the upside. We've tried to extend higher and it's failed. And now we've completely closed that gap. So we've still got a couple of levels below this level, and the weekly low of the 7,200 level is quite important to the downside. So let's see if we get a little break of that level. But as we look at this price action, we really like it below the 7,200. So we're going to add that. So we're obviously, there's a lot of markets that are, we've got 7 US majors to focus on, but we're really just fine-tuning that really to the more high probability markets that are showing us the strong direction that we need. But we'll add the Aussie dollar below the 7,200 level. And then finally, similar situation, New Zealand dollar. You can see that it's exactly similar situation to that of the Aussie dollar. Pull back to support, bounce off this level, and then continuation to the downside. So that's the level to the downside, and we've just got these little lows in here, so we're likely to get a little bit of a move lower. But as you can see, whoops, if I just switch back, we've kind of got a similar situation, a more pronounced rejection to the upside actually in the Aussie dollar. This is certainly a little bit more normal, but we can certainly add that to our opportunity to the downside. And what we'll probably either do is either sell the Aussie dollar or sell the New Zealand dollar, one or the other perhaps. So moving on to some other markets, little bit more difficult market, certainly over the last number of weeks, has been the euro pound. A lot of really choppy price action for a couple of weeks, then a really strong explosive move to the upside, and all we seem to be doing since that move, no follow through, just grinding action to the downside, and quite erratic as well. So maybe we back off the euro pound for a little bit longer. The pound yen, obviously it's been in this period of kind of strength for a few weeks, but we have some messy price action contained within here. It hasn't been as easy and as straightforward. We've had a really strong bearish engulfing, and then a reversal of that bearish engulfing the following 2 days. So last week has been up and down, difficult to get a handle on it. So we might, the levels we're looking for really at a 149.71. We've just seen a break of these similar levels. If we look at the dollar yen, just that is the 113.21, and that same level corresponds as the 149.71 in this particular market. And the same applies really for the 133.13 for the euro yen. We're firmly contained within inside the last week's levels. So really, we're looking for this market to either break above the 133.13 or even below the 131.16 if some strength starts to come back in to the yen, and we'll be keeping a close eye on the US equities if that's the case. The gold market is just moving sideways effectively. We were looking to sell this towards the latter part of last week. Friday's candlestick was pretty turbulent. We had a really strong reversal back inside these lower levels, which is obviously not good, and today we've got continuation to the downside. So just to clarify, we are looking for the gold market to sell off. We of course need to be extra careful and patient in terms of looking to capitalize on the move. So we will be looking for opportunities to sell it, maybe not just yet. We are firmly contained within Friday's buying candle. So we're currently at the 1186, and really we're looking for a break of the 1180 level to the downside. Now, we're currently experiencing a little bit of difficulty with the data for the US oil market, so we're in the process of finding out why that's the case. So we'll give you an update on that one shortly. So we come back to the US oil markets. We've had a really strong Asian session in the early part of the Asian session. We've actually gapped to the upside, and we just kept, pushing higher. A little bit of a bounce back to previous support at 29.28, and as you can see on a daily time frame, we're really extending these levels. But we've got a lot of price action within a fairly short range of 29.41 to the upside and the 29.02 to the downside. So yes, a bit of bullish price action coming in now, and we're at the beginning of, in fact, it was a week and a half ago we actually saw the actual break above the all-time high. So we are seeing these markets obviously make continuous highs. The pullbacks are what are often the problem, along with the sentiment. So I suppose it's well documented the fact that there is a belief out there that obviously there's we have technical indicators which suggest continued strength in the US economy. All of that stuff is looking pretty good, but we've been on a bit of a rampage to the upside for a couple of years, and obviously that rampage is still continuing. And obviously there's a section and a cohort that's suggesting it's very much unsustainable, and it does create difficulties in trading them, because any little pullback is literally being bought back again. We're quite close to the level on the Nasdaq market, which is the 76.90. So we'll see if we get a confirmed break above that level. And that could be a good opportunity to clear out this particular sort of sideways moving range now. You could argue this price action back here sort of mid-August. So it would clear this area finally, and we might get some confirmed directional bias to the upside. Even the price action over the last 5 days has been pretty choppy. To be fair, with some explosive moves to the upside, but a lot of retracements in there and things like that. So just very difficult to trade. It's not as easy as what it may appear. The FTSE 100, we do like this market to the downside. It doesn't seem like it's interested in doing so just yet. We do have a low of the 90. There's 74.45 to the downside and the 75.56 to the upside. So let's see what this market has in store for us. We've got a strong bearish engulfing on Friday, a really strong move to the downside, and if we get continuation below the 33.77, we'd expect it to continue lower. So that is the Euro Stocks. So with that in mind, we're left with a bit of a trade plan really, which involves looking at selling the euro dollar below the 15.70 level, the dollar yen. We can look for opportunities to buy. We're just at the 11400, so we'll see how price behaves around that level. And we've got a couple of markets to look at as well. Either selling the New Zealand, the Aussie dollar, US dollar, or the New Zealand dollar versus the US dollar. So we've got a couple of trades sitting in the pipeline, and I suppose just one strong eye really on the US equity markets to see if we're going to get continuation to the upside. We're quite close to a couple of those levels. We might be able to add that to our analysis in the short term. So what we can do is we can identify these levels. We've been looking to sell them for a couple of days now, so we've had some really good tradable opportunities in these markets. So we put in terms of our trade plan, we'll put the euro dollar just top left. We'll put the dollar yen bottom left, and just the Aussie dollar, we'll stick this top right. And the New Zealand dollar. So we have these levels now sitting in here. Whoops. So let me grab this corner here. So these are the markets we're looking to trade. So we want to have a clear direction. The only market that's setting up right now, we might go into it and have a look in a bit more detail. Let's look at it on the 15-minute time frame. So what we have is the 113.96, and we've got these lows sitting in here. So we've had a little bit of a breakout just in the last 45 minutes of this market just breaking to the upside. Now it's worth taking a note actually at a 11400 because it's a psychological level, which is just the price that we're at. So nice strong sort of grinding price action to the upside after a bit of, so you can see that we're getting strong moves sideways, relatively strong move. So we wouldn't be surprised at these levels if we get a little bit of sideways moving price action coming into it. I suppose that's the beauty of price action and trading price action, is that you get these moves followed by consolidation, followed by the move to the upside. So good morning, guys. I hope you're keeping well. This is, I suppose, the good morning, Connor. Connor, did you have a good Thursday and Friday in the end as far as the US dollar is concerned? Did you get into a few trades, I wonder? Guys, if there's anything that I've covered that you would like a bit more clarity, or you need to be, you'd like our decision making to be explained in a bit more detail, then do use the chat box. I'm just posting a comment there now. So do feel free to use that chat function if you possibly can. What you would need to do in order to do that is to log in or create yourself a YouTube channel effectively and log in as they just need to verify kind of who you are, and log in, and then you'll be able to sort of interact and post through the chatbot function. So we can actually look at the euro dollar, the Aussie dollar, and the New Zealand dollar in daily time frames, and you can see effectively what we're looking for. Oh, great stuff, Connor. Yeah. So yeah, let's have a quick look at that New Zealand Swiss. Yeah, so well done. So yeah, really nice kind of strong move to the upside after it's obviously counter trend. But we had a lot of selling coming into the Swiss franc. So well done on that one. And gold, yeah, so we had that strong move to the downside. we wanted to, well, we tried to get into this market beneath this low, but we had a strong reversal on Friday, on Thursday night. So we had the strong move to the downside, and the pound shorts, yeah, great trade. So so we had this really from Thursday onwards below the 31.39 was the high probability level, and we had a really strong rollover down to the 130 level. So now we're just waiting for a little bit of continuation, and we'll certainly add this to our list as well. And the Aussie dollar, yeah, really strong rejection to the upside. You can see the descending level. So it's just looking for opportunities at these prices, and we got another opportunity again Wednesday night, and we're able to sell it from these slightly higher prices. So a couple of good trades there. So very well done. We kind of had to wait a little while for him, didn't we, to develop and to just sort of give us that high probability aspect to those trades. And this was the level that we were looking at in the euro dollar, the 17.24. We had a really strong explosive move down to these lower levels. So some good trading opportunities in the latter part of last week. So hopefully that is the sign of things to come. We've got an interesting final quarter to finish the year. We've got midterm elections in the US. We've got corporate earnings being released, which will impact these markets in a whole variety of different ways. Potentially to the upside. There's a lot of positive sentiment about that. So obviously that sentiment can change really quickly. All you need is a couple of bad postings and things could sort of change quite quick. But we'll certainly be keeping a close eye on those. As far as the equities are concerned, so hopefully now we've got a little bit of direction potentially coming back into some of these markets, which is great. And I mean, what we do in terms of our style and approach is look to trade the trend. We look for tradable opportunities in the same direction as the overriding market is moving. And as you can see, it's really kind of, it's been very difficult, the euro dollar. So we were interested in taking a bit of profit there on Friday, just at these lows. So wanting to clear these levels to the downside, and the weekly low would be a good starting point. But to see if we get these markets pushing down to the 1400 level, that is the next port of call. Yeah, absolutely. Finally, just picking a direction. We had this really sort of difficult to trade, difficult to spot opportunities. We had a bit of a counter trend flush to the upside, which we're not so eager in trading, and then we had the procrastination before we had the proper move to the downside. And if you learn how to trade a trend, you often get the weight of the market behind your trades, which do help a little. Yeah, it is nice to see, because I suppose all in all, September was a very frustrating month. It was a very turbulent, choppy. It wasn't a month where we saw that many follow-throughs on any signals, which is very unusual, especially for September, because normally there's a lot of positioning in the month of September. So you often get some really significant moves across a variety of markets. But we've definitely had some challenging market conditions. So hopefully we'll have a productive October. Yeah, important to watch now. Yeah, we had those summer market conditions in July and August, and they pretty much continued, or it felt as if they continued for the majority of September before the FOMC decided to sort of do what they were going to do. And certainly, if we look at the euro dollar, it's a good starting point. If this price breaks below the 115 level, then not only would the whole sort of dollar strength story really start to develop and unfold, but it will give us a lot of clarity in a lot of other markets. Bit of strength coming back in. So going back to our trades, got the euro dollar, Aussie dollar and New Zealand dollar, as you can see. So the major market really are the only market that's really moving for us right now is the dollar yen, and we're just getting a little bit of a push. So now we're above So what's going to be important for us now, if we're squeezing above this 11400 level, is to actually close above that level, and actually the high probability trade would be to wait for the opportunity. So if we did get a little bit of a break to the upside, to actually look to get involved in kind of the pullback trade, depending on what happens. And if you can sort of get in along those kinds of lines rather than just buying the breakout trade, yes, it's a viable trade. The high probability trade would be kind of waiting for a pullback if we get a break above these levels. So Connor, you're saying that you're really interested in the Aussie dollar. It looks like to being put in a squeeze triangle on the 4 hour, and waiting to decide which direction now. Yeah, would agree. We're still firmly contained within inside Friday's highs and lows and Thursday's lows, as you can see. In fact, it's the same situation for 3 trading days now. So we'll have a look at this. So it's right to be, so this is your uptrend. So that's when you obviously get higher highs and lower lows, and higher lows. So this is firmly your uptrend, and now what we're seeing now is the signs of actually a downtrend. So effectively a double top and a structural failure, an M formation, structural failure to the downside. So we've had a bit of a pullback, and now we're just, I suppose what Connor was suggesting is the high probability trade would be around the 7200, and we capitalize on this next move lower. But the thing is about this particular trade in the Aussie dollar is that we're firmly in a downtrend. So yeah, periods of consolidation, but then you get these flushes lower. And we're just experiencing kind of similar price action as things currently stand. But we do have the weight of the market behind us, and that's really the important part when it comes to identifying these opportunities. Yeah, so you're talking about the dollar yen. So you're watching it push towards the 14.18 area, and then with a view of hopefully getting a pullback. That would certainly be in keeping with our analysis as well, Connor. It's extending higher all the time, isn't it? So you're just looking at these levels in here for the 114.18 level, Connor. Just up at these slightly higher prices. So we're beginning to get that little squeeze to the upside now. So there we go. So now we're on a minute time frame. So yeah, so it's a strongly identified level of resistance preventing prices from pushing higher. Yeah, in and around that kind of level, isn't it? You know, there's a bit of a range around that level to the upside and to the downside on multiple occasions, but yeah, you're effectively absolutely spot on. Now, we made decisions to trade the euro dollar, the Aussie dollar to the downside, even though the opportunity presented itself in the dollar yen. So it's just a case of cherry picking. Obviously, a lot of strength came into the US dollar, so we got moves across most of the markets that we were looking at. So those of you that were able to access our daily trade watch last week, you'll see us talking about the US dollar quite a lot, and identifying all of these opportunities in all of these markets. Apart from the dollar CAD, the dollar CAD was one of the markets that we left off of our checklist, just because there was much better technical opportunities in other markets. All of these other markets would have been worth trading towards the latter part of last week. So let's see if we get some form of I suppose a 2 or 3 pip pullback is not really kind of what I was referring to, but we need to give it a bit of space. We're now looking at it on the minute time frame, so these are very short-term moves. We see the Aussie dollar, I mean, it is a 4-hour chart, but let's take it back to the daily. So we're just firmly trading with inside Friday's range. Same for the New Zealand dollar, and same for the euro dollar. So clearly just a little bit of patience is probably required with some of these. And so just to clarify what we're looking for, this is quite a steep incline. Certainly if we take this kind of approach, if we get kind of a rollover to these kind of levels back down here to the 1400, we might look to capitalize on it to the upside from these slower prices. So we will get that pullback. It's just a case at what point, and are we willing and able to be patient. We're only sort of 3-4 pips above this level as things currently stand, so we're currently getting that move. We would like to trade the pullback. So for us, it's a little bit of patience really. Just want to see if the US equities are moving or not. Yeah, they're looking quite full. And we're getting the US looking or threatening as if it's going to break above the 76.90 level. And that's the Nasdaq. The US 100 is the Nasdaq market. So these markets are really looking to continue that move to the upside. Okay. So let's look at the FTSE's kind of retracing off its lows. We do like the FTSE lower, but only for the short term, especially if we get some continued pound weakness. We'd expect the FTSE to actually probably strengthen as a result. So we're just getting some strong US markets, which is really the reason why we're getting the move in the dollar yen. So this move here is very much more about strengthening the global equities in the US, because the Japanese yen is a flight to safety. So if there's a risk-on approach in your equity markets, you're very likely to see some yen weakness. And that's what this bit of price action is representing, and you can see it across the board. And you can see a bit of strength coming in or continuing to come into the pound. So So it might be worth having a look here at the dollar yen, the pound yen. So this is again a little bit more on the choppier side, isn't it? We're firmly within higher highs and lower lows, and we really don't like sort of markets that behave like that. Now, again, kind of this market is kind of set up for a bit of a pullback trade. So what I mean by that is we would ideally like to see if this market can extend to the upside, and then see if we get a bit of a pullback. And if that's the case, there's your high probability trade to the upside. But certainly not that interested. Not that interested in getting in at these levels. This is just like between two strong levels. We don't want to be getting in at these levels. We'd like to be obviously capitalizing on a breakout trade above that level, or a pullback trade which is below that level. Yeah, so that's it. So that's the pound yen. We can actually add this market to our analysis, to be fair. So what we'll do is we'll put the we'll put the pound yen just in there, and we can just take keep an eye on both of these markets on here. The Aussie dollar just to the upside, so we want to see this market break below the 7200 level, and that's the 65.96 to the downside in New Zealand. So not sure if these markets are going to move anytime soon, but we do have the yen pairs that we can have a look at. So what we're looking at these times is looking for an opportunity to buy this market on a pullback, maybe in and around the 11400 level, and it's a similar analysis for the pound yen. So we're kind of wanting just to suggest that we want the markets to push lower before we buy, and we want the markets to push higher and then roll over to the downside before we buy the pound yen. So both of these are pullback trades. That's what we're kind of looking for. And just to clarify, we're looking for the euro dollar to sell, the Aussie dollar to push lower, and the New Zealand dollar to push lower as well. So let's see if we get those opportunities. Yep, you're absolutely right, Connor. Thanks very much for the update. So it is 9 o'clock. Yeah, we do have PMI numbers coming out, I think 9:30, which is the UK PMI. So you're absolutely right. So let's make that switch. So guys, we do have our traders over at the live trade room now. So we're going to look for opportunities to buy the dollar yen around these lower prices. If we get those opportunities, if they set up for us in the way in which we like to trade these markets. We'll be watching very, very closely. We might need to be a little bit patient with these. So it doesn't look like they're going to move during the European session, but maybe in the afternoon session we might get much better opportunities in the Euro dollar, Aussie dollar and New Zealand dollar. So on that note, guys, thank you very much for joining us. We're going to have to switch across to the live trade room. For those of you who are perhaps interested in joining us here at the live trade room, please do read the description below. We're currently offering a 14-day free trial, so do come and join us. You can access over 76 live trade rooms per calendar month, and obviously a wealth of content there as well for you, and lots of education and things like that. So, and if you do decide to stay on after the 14 days, then it's simply a $9.99 per calendar month, and that's it. You can also please connect with us. Do subscribe to our channel and give us a thumbs up if you possibly can. And you can also connect with us through our Facebook, Instagram, Twitter and LinkedIn. All the details are there up on screen. So all that's left for me to do now is to thank you very much for joining us. Do take care, and we look forward to seeing you next time. From everyone here, bye for now.